The Nigerian Central Bank recently said it had issued operational guidelines for open banking in Nigeria, which are expected to enhance efficiency and access to financial services. According to the central bank, some of the guidelines' objectives include ensuring consistency and security across the open banking system. The Central Bank of Nigeria said on March 7 that it had issued what it called the operational guidelines for open banking in Nigeria. According to the central bank, the guidelines are expected to foster the sharing of customer permission data between banks and third-party firms
in the country amid the new Naira notes cash crunch. Now, the guidelines establish principles for data sharing across banking and payment systems. Now, let's look at the pros and cons of this initiative. Carlos Figueredo, the CEO of Open Vector, joins me for this discussion. Carlos, thank you so much. Pleasure to have you on the show today.
Hi, Esther. An absolute pleasure to be here. Thank you for having me.
I'd like to get your initial thoughts on this open banking. I mean, this has been an ongoing conversation, and now we're seeing it happening. Just your initial thoughts.
I'm incredibly pleased. I've been traveling to Nigeria since 2018, initially as part of the Lord Mayor's delegation, where we first spoke to the central bank and to the vice president, to ministers about this incredible movement that started in the UK back in 2016. So it's been a long journey. I think I'm very, very pleased to see it, especially for what it will be doing in regards to financial and social inclusion in that country. So it's fantastic to see.
Yeah, absolutely. And I'm sure the fintechs are excited at this news too. But talk to us about the specific ways in which fintechs and banks this is going to boost the partnership of fintechs and banks, and what will interoperability look like?
So all around the world where open banking and open finance has been implemented, we are seeing how this is creating such an incredible opportunities for fintechs to work with banks in order to utilize that data that is available in order to create these unique products and services that will make a difference. So for fintechs, this is an incredible opportunity for them to finally have access and be able to help banks to create these products and services. But let's not forget one critical thing is that open banking is all about consumers. This is not an initiative that it's really there to benefit consumers, both banked and unbanked. So that is something that we really have to keep in mind, why open banking was created, and to make sure that we are always focused on the fact that this is completely for the consumer.
Now, for those consumers, the customers, bank customers who may be hearing this for the first time and hear the part where, which is the whole essence of it, sharing the data to third parties, that may make some customers a little uneasy, but I know that part of the regulation provides for security, protection to the consumer, etc. But how ironclad is that? And when we're talking about guardrails, how effective can we expect it to be to the extent that the customer ultimately, at the end of the day, is protected? And for those who do not want their data to be shared, that will also be respected.
This is a very good question, because there's been a lot of confusion, and I think it's just a lack of education really about exactly how open banking works. Anytime we talk about the sharing of data at all levels, consumers, with fintechs, and in the financial sector, we immediately realize that there is the potential of data leaks and all kinds of different things that have happened in the past and in different initiatives. In the case of open banking and in open finance, I think there's been a very, very good job that started in the UK with ensuring that there are structures, that the architecture around APIs and how the information is shared, all of these different elements of best practices, and the opportunity for the consumers themselves to be part of this by using consent mechanisms is what is going to allow us to protect all of the parties involved. And this is exactly what this regulation stipulates. It uses best international practices, and it has within the architectural structures that will allow us to feel confident from the consumer to fintechs, to banks and vice versa. So I think that they've done a very good job in ensuring that at least the first rails are there, and now it's just a question of seeing how we build on top of that.
Now, with the announcement of the regulation, can we expect things to take off immediately? What are the steps that need to be taken before we go full throttle?
So that's, again, this is where we've seen around the world where it's the take-up has been different. The main participants here being the fintechs. With fintechs having access now to this information, they will push the market. Financial institutions will be hesitant. They just understandably come from a more traditional way of thinking. For them, this is really breaking down structures and walls that have been in place for many, many, many years. So it'll be fintechs, it'll be technology, and it'll be the consumers themselves that will drive this innovation, that will drive the financial institutions themselves to have to participate. And for those, and this is what I really, it's incredible to see, for those institutions that really understand this and give it a chance, they will be the ones that will be most eager to participate if they can truly understand what this is about and how they can also benefit. It's not a one-way street. It's not about banks simply sharing data under the ecosystem. It's also banks being able to consume that information. And here is where they have a great opportunity of understanding that and becoming part of the system instead of believing that it's just a one-way street into fintech. So I really think that it'll be first the fintechs. And by the way, having been in Nigeria a couple of times now, there is a wonderful fintech community. There are also financial institutions that are very willing to work with fintechs. I've seen that myself. So I think Nigeria will have a huge advantage in that sense, that they won't go through some of the growing pains that have happened in other countries.
Now, some of the pros that's also been talked about is the ability to create